My name is Oluwatosin Olasende. I'm the founder of Money Africa. Money Africa is a financial literacy platform that educates people about their money, leveraging on technology. Welcome to the maiden edition of Money Africa podcast. Today we'll be speaking about a very important topic about the 2023 outlook, also looking at what happened in the prior year. So I have with me our one and only COO, Adedayo.
Hi, Tosin. Thanks for having me.
You're welcome. So before I jump right into the question, can you just give us a bit of background about yourself? What have you been doing for the past 5 to 10 years?
Okay. 7 years ago, I graduated from Obafemi University. I studied economics. Then after that, I came to Lagos. I worked in asset management for some time, so ethical asset management. By ethical, I mean, investors who don't want traditional investments for different reasons. It could be because of their faith, right? So you have Muslims who want Sharia compliant investing. So that's part of ethical asset management. I did that with Lotus Capital for some time. Then I went for my NYSC in Cross River, where I worked for an NGO, a Canadian-based NGO called Kusu International. And what we were doing was working in the natural resource sectors. So agriculture, forestry, trying to help young people to build businesses around those sectors. And after that, I came back to Lagos and I worked as an economist for PwC for some time. And then I left. I went to an investment banking firm called AfriInvest. And there I headed the macro research team and also supervised equity and fixed income research. And then, I joined Money Africa in 2021. And since then, I've just been, trying to help people think wisely about their money, manage their money better, and generally just give them good advice on how they can make the best of their financial, long-term and short-term financial goals. Yeah, so that's it.
Fantastic intro. Great. So let's jump right into it. Adedayo, tell me, what has been happening globally in 2022? As we've now in the new year, we want to look at the outlook, but we also want to take a step back and see what happened last year.
Yeah, I think it's absolutely relevant to look at what has happened in 2022 because it's going to provide very good context into what to expect in 2023. So 2022 was a very challenging year, and this is not limited to Nigeria. Globally, it was very challenging. And the big problem was inflation, right? And so what inflation means is when you have a very, a sustained increase in prices. And when prices are going up very, very fast, then it becomes troubling. And why is this troubling? It's because for so many people, your income does not adjust as fast, right? Your investments or your savings might not be growing as fast. So when prices are increasing too fast, and your income is not growing as fast, then you become poorer. It means you can't buy the same things again with the same amount of money, or you need a larger amount of money to buy the same things. And this makes everybody poorer. And that's why it's sort of an emergency for governments and especially central banks to fight it. And so if you go to the US, if you go to Europe, if you go to even Japan, which had been battling deflation. So deflation is the opposite of inflation when prices are going down, right? Some might think, but that's a good thing, because you want to pay less, right, for goods and services. But the problem is it's not good for the economy and for businesses, because if people know prices are going to go down, then you're going to delay your spending, right? And that means businesses will not be able to invest. Companies would not hire as quickly as they should. And so that's troubling as well. And so basically what most of the world was doing was responding to high inflation. And another reason why people might wonder why we suddenly had, very high inflation in 2022. I think we need to take a step back and go back to 2020. Right. 2020, we had something that was almost unprecedented with the COVID-19 virus. And as a result of that, we had lockdowns, right? A lot of dislocations, a lot of disruptions to the supply chain. For most people, what you knew about was, I stayed at home for a few weeks. But for the global economy, a lot of supply chain meaning, how we from manufacturing goods, from agriculture to how we get goods into the end consumer's hands. That distribution, entire distribution and production network was disrupted significantly. And so during COVID, we saw very low inflation. But after COVID, due to those disruptions, right, as the economy was reopening and people started moving around, people started traveling, it took some time to adjust from that shock, and we had very, very high inflation. Then what worsened it was the sort of the war we saw, very early on in Q1 in 2023 as well, between Ukraine and Russia, and also because they produce a lot of food, wheat, for instance. So if you've ever wondered, why is it that pastries are becoming more expensive? Why is it that bread is more expensive? It probably has an origin in that war. And so that's how 2022, a lot of what happened and that shaped the local economy was actually externally driven.
Fantastic. So this background is very important, because we just want to see what's driving the numbers, what is the world battling with, what we're doing, responding to, amongst others. Now, how does this affect the market locally? Let's bring it back to Nigeria.
Yeah, so most of the world were experiencing very high inflation, for the first time in decades, right, in 2022. In Nigeria is our reality, right? We've been dealing with inflation at around 12% every year for a long time. And if you look at over the past decade, 1,000 naira in 2010 today is probably worth around 200 naira, right? Just because of the high inflation we have in Nigeria, which is concerning, because the target by the Central Bank of Nigeria is we shouldn't have more than 9% inflation. So when you have a sustained period of more than 9% inflation, then it's very destructive to people, and it's something people have to pay attention to. Now, a lot of that inflation was also imported, because when you have troubles all over the world, when oil prices are rising, when food prices are rising, because we still import some food. Yes, most of the food we consume in Nigeria is produced locally, but we still import some. So that means we import some of that inflation. Also locally, we have challenges around the dollar, naira dollar exchange rate. And so because of that, as the naira continues to lose value, then to import from the rest of the world, it becomes more expensive, and that contributes to rising prices locally. Also locally, because most of our food is produced locally, especially food, there's still a lot of insecurity, in the if you go to the northeast, if you go to the middle belt, even in so many parts of Nigeria. All Nigeria, all regions of Nigeria are insecure to an extent, and that continues to affect food production and distribution. So things like inflation, things like the currency devaluation, high level of insecurity, there are issues that we've been battling with in Nigeria for some time. So the rest of the world basically caught up with us.
Yeah.
And in terms of response, we've also been very, very slow, right? A lot of the central banks all over the world. So if you go to the US, you have the US Federal Reserve. In Europe, you have the European Central Bank. In the UK, you have the Bank of England. They've been very aggressive towards fighting inflation. And why that is because, in Nigeria, they say we are resilient, right? Prices can double within 6 months, and nobody will protest. But you can't try that in France, right? You have people on the streets, and that is why those countries know, the leaders of those countries know, the policymakers know that inflation that is too high cannot be allowed to sort of persist. Because in the US, I think it reached as high as 9%. Right, which was the highest in more than 3 or 4 decades, and that is not something people will stand for.
Interesting. So I guess the next question is, what can we then do? What are the steps that we're anticipating that policies and things like that can actually use to address those things?
I think it's just it falls on leadership, right? It's trying to realize that when you have problems, especially when you have shocks. So when we say shocks in economics, we mean events that happen that they can be a very small event, but the impact, that have an outsized impact, we could say negative impact on people. Then that means you need leadership to be able to get through the times. So one way you could say, for instance, ease the pressure on people. In Nigeria, the average person spends almost 60% of their income on food.
That's true.
Right? So out of every 100 naira you earn, you're probably spending 60 naira of that.
On food.
Yeah. Or out of every 100 naira you spend, rather, you're spending 60 on food. And so that means food has to be cheaper for people, because you're not only spending on food, there's rent, there's transportation.
There's school fees.
If you have a family, right, you have to pay for education, you have to pay for medical care, right? So one of the ways to deal with it is just to think about it, right? If we're not producing enough locally, why not let's import? But not just in terms of importing, why not let's reduce the tariffs? Because on rice, for instance, there's no reason why we should be paying over 40,000, to buy a 50 kg of rice. If you go to Thailand, if you go to Vietnam, I promise you, it is not as expensive as 10,000 naira, or 15,000 naira. It is because of the level of taxes that we have on it. It's because of the restrictions around it. So one of the restrictions is, if you want to import food, the CBN will tell you, oh, we're sorry, we can't give you FX, right? Which is funny, because if you want to travel, the CBN is going to give you FX. If you're traveling outside the country for medical care, they're going to give you cheap FX. So what I mean by them giving you FX is at their official rate of 460, not the parallel market rate. So if you're willing to give people subsidized dollars to go on a vacation to Turkey or to Dubai or wherever it is they're going for medical care, to go and study abroad, why can't you give FX for people to eat, right? And that's the majority of the problems Nigerian face. Also, in terms of reducing tariffs, the taxes on rice is as high as 70%. So if rice is the primary staple in the country and the majority of your country is poor, then the solution is, how do we get cheap rice into people's hands? But in Nigeria, we are obsessed with producing it locally, and often local production is much more expensive. So it's really about leadership.
Interesting. One day we'll dedicate one of those podcasts to just talking about this production and things like that, because other people on the other side could also say that, the manpower, the people that have been employed in those sectors, how do you strike a balance such as we also do not kill the local market? It's just a very, very big debate and a big conversation out there. But I'm sure we'll delve more into it to get more. So the next question I want to ask you, Adedayo, is, for our community, we have over 400,000 community members, guys. If you do not follow Money Africa, follow us on Instagram, LinkedIn, Twitter, YouTube. We're one of the biggest financial literacy platform in Nigeria. Now, a lot of people are asking, it's 2023, we are right in February, just right at the top of it, right? As an individual, how should I invest in 2023, considering all the uncertainties? There's an election coming, all these many things that is going to happen. How should I actually invest?
It's a delicate question to answer. Globally, it's important as an investor first to always pay attention to what is happening in other parts of the world.
That's true.
Because eventually it's going to also impact Nigeria, and then our policymakers would also make their own policies that would then affect you, right? So the first thing is to look at what is going on all over the world. 2023 is going to be a bit different from 2022. So we had a big inflation problem in 2022, but in most countries of the world now, we see a situation where inflation is coming down. It's gradual, right? But it's coming down. So we've seen that in the US. And what that means is a lot of the actions that central banks have taken that they've been very aggressive with last year, they're going to slow down a bit. And when they slow down a bit, then it could be, it could provide a bit of respite. So for people who invested in cryptocurrencies last year, people who did, even, you did, say, real estate investment trusts, for people who invested in stocks, definitely your portfolio was battered.
Yes.
And why your portfolio performed poorly was because of higher interest rates.
Sure.
So when central banks see that inflation is extremely high, they try to raise interest rates to slow down spending and investment in the economy. And by doing that, they're able to slow down demand. And if you slow down demand, then prices can still go up, but they won't rise as fast as they should, right? Now, the downside to that is that it could also have an impact on your investment portfolio. So that's why real estate prices were coming down. So if whether you're in Europe or you're in the America, prices came down last year. Why? Because also, think about it. When interest rates are low, it's easier to finance a mortgage, to go and buy houses. And, there's a lot of demand for houses and the prices can go up. But when banks raise interest rates, you'll be a bit more cautious, right, before you do that. And also, when interest rate is low, it's easy to just borrow and spend on random things, even if they are non-essential. But when you see that it is very expensive and that if you borrow, you're going to be paying a lot back, then you want to slow down. So that's how central bank has calmed down the economy. Now, why it's going to be different this year is that inflation is coming down already, so they'll be less aggressive, and that means a lot of those risky investments have the potential to do better. So things like stocks, things like cryptocurrencies, there's a bit of reprieve, right? But that is on the condition that inflation continues to come down gradually. So that's the situation globally. And so if you're an investor in Nigeria and you have say $1 portfolio, it's something you want to be mindful of, especially what is going on in the US is very, very critical. Now, one of the best performers that we saw last year was the dollar.
Yeah.
Right. Last year, just buying dollars and burying it under your pillow, would have done better than investing in the stock market or investing in real estate. Right. Now this year,
the Nigerian Stock Exchange performed well.
Yeah, the Nigerian Stock Exchange was an exception. The Nigerian Stock Exchange did well last year because other countries were focused on fighting inflation. They raised interest rates that affected stock prices, and that is why we saw a bit more investments in Nigerian stock market, and the market did well. It's because interest rates aren't as high as they should. If you put your money in most investments, they won't compensate you for inflation. And so what's the next best thing to do? You turn your attention to the stock market. But the way we like to think about it for our clients at MoneyAfrica is it's not just about Naira returns that you care about. You have to care about what we call real returns. So you have to adjust it for inflation. So if the stock market did 20 or 21% and inflation was 21%, you're basically neutral, right? Then you also have to think about the Naira to dollar, sort of depreciation that you saw. We started the year at around maybe a little over 580 and we ended the year at around 750. So there's that consideration as well. So if we adjust the local performance of the Nigerian Stock Exchange for inflation and for, the depreciation in the Naira, you're probably better off just buying dollars and parking your money in it. So that's those are the dynamics really. But this year it's a bit more exciting globally because interest rates they're going to slow the rate at which they're increasing interest rates, and it could be good for risky assets. So for a lot of people who are looking to take a bit more risk this year, it could be a better thing. Right now, I mean risk in the financial market, not
Ponzi schemes.
Oh, no Ponzi
please,
schemes.
Not
please.
Ponzi schemes, please.
Locally, I think a lot of how the year would go would depend on the outcome of the elections.
Interesting. So let's talk about the outcome. What are the big issues? What are the things that we should be looking out for pre and post?
Okay, pre-elections, I think the major issue is the currency redesign. 200 Naira notes, 500 Naira notes, and 1,000 Naira notes are being phased out, the older ones, and being replaced. And we've seen that implementation of that policy has been bad. A lot of people now are stranded. It's hard for people who have deposited money, for people who need to make cash transactions, that is, use physical notes to pay for transactions, is extremely difficult because we don't have a lot of the new notes available. And, that's essentially, I think one has to hold the CBN accountable for that. And why that is the case is because the CBN is responsible for currencies, for notes. So your banknote is the liability of the CBN. They are responsible for all that. And so they've not distributed the new notes properly. And it's affected a lot of people. Also, electronically wise, people are trying to switch, right, from paying with cash to, doing more electronic transactions. But one thing you've seen is that there's a high rate of failure. A lot of banks are probably not prepared for sort of the capacity we are seeing on their systems, right? So you have, if you're doing bank transfer, for instance, it could take a long time for transactions to deliver. And the benefit of cash is instant, right? If I have 100 naira note and I'm buying something worth 100 naira, I give it to you immediately. That's the end of it. I don't have to start checking, what bank are you using? Have you sent the money? All those complications. Also think about a lot of Nigerians who don't even have access to the internet. A lot of Nigerians who are not literate. A lot of Nigerians who don't own a smartphone. You can't expect them to download all these apps and say they want to do that. So that's sort of the big issue we've had pre-election wise. And it's very, very important because if people are not able to perform transactions, then it's most likely going to slow down a lot of people and businesses, because things you should normally do, you won't do them. Sales that you need to make, you won't make as much sales. And that's very, very troubling. So you could see a situation where growth is actually affected due to this policy, unless we're able to respond very quickly to it and decisively. Post-elections, right, we have the elections, I think, in 2 weeks. And the issues are huge, right? Because over the past 8 years, when you think in terms of government operations, so we call it fiscal, right? Fiscal policy. The decisions governments make around spending, around revenue, you can think of taxes. Spending, you can think of recurrent expenditure, paying salaries. Overheads, right? And also building infrastructure. Revenue wise, you're thinking in taxes the government makes to be able to spend. And then the borrowing. So we call it deficit. So when you're spending more than you're earning, right, then it means that money has to come from somewhere.
Sure.
For the government, it means they have to go and borrow, right? And so when there's that borrowing happening, you say, you're financing the deficit. Now, this is creating a problem because we've gotten to a point where we've stretched ourselves too thin. As an individual, if you want to borrow money and you go to a bank, the bank would want to know if you have existing loans, right? They would ask you how much of your current income you're using to service your debt. And a lot of the banks, if it is above 33%, if you're using more than 33% of your income to service debt, to repay back, all the institutions that have loaned you money, then you are risky, right? Why do they do that? It's because you need to do other things in your life, right?
Sure.
It's not only interest that you be paying. So if you're already using 33% of your income to pay rent, then the question becomes, how would you eat?
That's true.
How would you survive? And so that's why they have that restriction. Now, if you transfer it to the government, it's almost similar. Right, you could say it's a bit different because the government has the power to print the currency. Federal government is specifically now, right? Because even state governments can't borrow anyhow. The Lagos state government cannot print money, so they can't borrow anyhow. So a lot of their borrowing will still be dependent on their capacity to repay. But for the government, we've seen a situation where, because the government has the powers to print currency, not directly, but indirectly via the Central Bank of Nigeria. Now, naturally, we should have some form of independence where the central bank should be free of influence from the executive. There's a clear separation of powers. It's also why the judiciary should not be influenced, right, by whoever is the executive or, so many other institutions. We have so many other institutions like that, and the CBN. But what we've seen is that the CBNs, we've seen a very close sort of unhealthy relationship between the governments from the Ministry of Finance to the executive to the CBN, and because of that the government has been borrowing way more than it should. They are borrowing much more than the capacity that they have to repay it back. And that's why just last week I think it was Moody's that downgraded Nigeria. And what that means is, for now, Nigeria we can't even go and borrow abroad. Why? Because we are now in a position where we are very fragile. The federal government is very fragile and they don't have a lot of capacity to pay. And so when we're thinking about the issues that will be relevant, that's one of it. Should the CBN continue to fund the government, which is, by the way, illegal and against the act that created the CBN itself. Then you have other issues like subsidies, right? We all know about the which is also even a big election issue, right? We've had a situation where there are a lot of fuel queues, right? There's fuel scarcity currently, and that has even led to an increase in prices, right? And that's what happens. It's not because marketers are greedy or petrol stations are greedy. If you don't supply a product abundantly in the market, prices are going to go up. Whether it is fuel, Nigerians know this about tomato, but for fuel, for some reason, we tend to be all up in arms. But it's the same reality. So whether it is dollars, the reason the naira is depreciating is there's not enough supply. And how do you get more supply? You have to earn it by being more productive. For fuel, the reason prices are going up, and that creates incentives for other people to be corrupt and to cheat people, is because of scarcity. So you have to fix it. So that's going to be another issue going forward, because now it's only the NNPC that imports fuel into the country, right? And that's a very big risk. In many countries, you have a situation where that function is not present in just one person. You have petroleum marketers who can always ensure that products are fully supplied. We import diesel, we import kerosene. You rarely hear about that scarcity as much as you hear about fuel. Fuel is because fuel is heavily regulated, it's subsidized. So the new government that is going to come in, we're definitely going to have a new government. They have to decide whether to remove the subsidies or sustain it. But as much as possible, one of the issues facing Nigeria is because of the subsidies. So that's why government doesn't have even enough money. That's why their finances is not in good standing. Then another big problem is also around the exchange rate. What is the direction? Since 2020, foreign investors have left the country, right? And we know that as a developing country, for you to be able to develop properly, you need outside investments, right? You need people to bring money into the country and build businesses that would hire people, right? You create jobs, you're able to pay taxes and all those things. Now, one of the reasons why foreign investors are not coming into the country is because our exchange rate environment has not been friendly. Mm-hmm. So there are all kinds of rates. There's the official rates, there's the parallel market rate, and that is confusing, because what that means is there's most likely going to be a devaluation, and no investor wants to be trapped, by that devaluation. So we need a bit of clarity around the exchange rate, exchange environment. Electricity subsidies is also another. There's so many issues really around elections, and depending on who wins, their response to that issues will shape pretty much the rest of the year from an investing and saving point of view.
Oh, that's very, very interesting. Like, we're talking about the issues, how they will respond and things like that. My last question to you is, how do you feel about this year in general? In general, on a personal and professional note, I think I'm very excited about the year. It's a very promising year for us. And I'm excited that we started on a very good note as well. For the country, I'm not so optimistic, right? A lot, like I mentioned earlier, would depend on the outcome. As an individual, I also make spending choices, I make investment choices, and I know that like I mentioned earlier, if you're someone who is just doing dollars, right, what you should pay more attention to is maybe what's going on in the US. And like I mentioned, it should be a bit of a better year. So if you're saving in dollars, you're okay, and if you want to invest long term in dollars, you're okay. Because one of the questions we also get a lot is people say, oh, will there be a devaluation? Will Naira gain? Will dollar continue to lose? I need to make a decision for myself and for my business. And what we always say at MoneyAfrica is, if you're investing long term, which is 7 years and above, you can always invest in dollars at any time. Don't worry about the volatility in the currency. You end up being fine in the future, right? But if you're short term, meaning in the next 1 month, I need to travel, I will need dollars, then ensure that you save in the currency in which you need it. Yes.
So if you need to pay school fees in dollars in 3 months' time, just save in dollars. Don't worry yourself about what is going on with exchange rates. If you're saving in Naira, or your obligations are in Naira, right, ensure that money is also in Naira. So when you match with the currency of your obligation to the currency of your saving or your investment, then you are completely unprotected. So yeah, it's a good thing to look forward to. Politically, I think there's a lot of excitement around the elections. So I'm excited about that and about the potential outcome. And for the rest of the year, let's just be a bit more, optimistic.
Fantastic.
I think one big risk that leaves little room for optimism is, in the central bank. I think, we need a much better response to, sort of the most of the issues we have in the country.
Thank you so much to our COO, Adedayo. That was a fantastic outlook and just basically sharing. I think our theme for this year for Money Africa is joy, right? We want everybody to stay optimistic regardless of the outcome. Remember when COVID happened and everywhere was shut down, nobody knew what was going to happen. And then look at us now. We're back on the street without the mask and looking for how to come out of it. So I want we advocate for everyone to stay optimistic, stay joyful. That's one of our theme for this year. And our next theme for this year is more money. You are your biggest asset. So invest in yourself and stay optimistic. So that's it from us at Money Africa. Do not forget to keep on the watch out for our episodes and follow us on social media. It's Money Africa on Instagram. It's at the Money Africa on Twitter, and share this with your loved ones. Thank you.